Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Eurodollar. A higher, bullish white soldier yesterday after the previous session's indecisive doji cross. The market managed to barely close over the important 50% Fibonacci line for the January 2021 to September 2022 move at 109.44. This had become a capping resistance in recent days. Initially it was only on a closing basis, but lately on a daily high basis. A second thing to note is that I previously set out a target X at 109.85. This was for the secondary harder to reach target for the small broken mid-January, late February bearish expanding wedge pattern. The high late last week was at 109.80, which has target X just about reached. Further overhead we have the broken green highlighted lower bull channel line currently at 109.90 of the October 2023 to late January 2024 bull channel. This has also acted as an overhead capping action, and I'm still wondering if the market will now trawl along the underside of this lower bull channel line. Meanwhile below, well, we have a fairly clear zone until the combination of the green highlighted, very slowly declining short medium moving average, currently 108.61, and 50% Fibonacci line for 2023 at 108.64, plus the mauve colored slowly rising medium moving average, currently 108.57, and finally the gold colored very slowly rising long moving average, currently 108.37. Now these last two, the rising medium moving average and the gold colored long moving average, these last two have been the base for the drive higher from early last week. So far today, a seeming reactionary move back down below the 50% Fibonacci line at 109.44, but still within yesterday's range, and looking either like an indecisive spinning top or an attempted possible bearish dark cloud cover pattern right now. Cable, aka sterling against the US dollar. A second indecisive pattern yesterday, this time an indecisive doji cross after the previous session's indecisive spinning top. Prices were nicely captured with a space created by the overhead dark blue highlighted middle time, currently at 128.18, of the broken November-December 2023 shallowly bullish shift pitchfork, and below by the previously mentioned general congestion, now support formed between December 2023 to January 2024, and that's from the 126 area up to the 127.75 area. Now further overhead we have the November 2020 low at 128.52, and just above that the declining bright red highlighted July 2021 to date downtrend. That's currently at 128.57. Now the downtrend is still the one to watch. Now so far today, a very limited action, a little higher but capped by the dark blue middle time. Euro sterling. A third bullish white soldier yesterday and a continued suitable follow-on higher to the recent immediate countering bullish harami. This time the market closed back up over the combined December 2022 and 2023 lows at 85.45 and 85.47 respectively. The top side was capped, unsurprisingly, by the oft-mentioned declining short medium moving average, currently at 85.61, and the recent congestion running up as far as about 85.75. Just keep an eye on that short medium moving average. Its capping influence has been seen here since mid-February. Overall, the market is still within the breached but not broken purple highlighted late January small expanding wedge pattern, currently at 85.25 to 86.08. In the recent process of moving higher, the market left behind a similar pipe bottom in March to the one seen in mid-February, leading to speculation that we might have a larger double bottom pattern formed with these two pipe bottoms. Now, more on this should it develop. A little further down, we have the support seemingly working in recent days on a 2 consecutive close basis of the dark blue middle time, currently at 85.15, of November to December 2023 bearish shift pitchfork. Still further down is the bright red neckline of the May to August 2022 head and shoulders continuation pattern, currently at 84.98. This is a further significant support. Overhead, the market tried tackling the combined December 2022 and 2023 lows at 85.45 and 85.47 respectively, but failed to close over them. A little further up beyond the short medium moving average and the recent congestion running up as far as about 85.75, well, we seemingly have little beyond that until what looks like a pretty heavy duty combination congestion formed from the crossover of the upper trend line, currently at 86.08 of the purple highlighted expanding wedge pattern, the dark blue upper time, currently at 86.11, and what may be a potential dead cross of the medium moving average, currently at 86.07, and down through the long moving average, currently also 86.07. So far today, well, a strong reactionary move lower, looking like it might make a possible key reversal down, if only just, as prices headed below the lows of 85.45 and 85.47. However, there is still plenty of time to go, just to see what happens. US dollar against the Japanese yen. An indecisive doji cross yesterday as the market's main body seemed trapped between the overhead rising short medium moving average, currently at 147.90, and below the almost flatlining medium moving average, currently 147.5. 2 things to note here. Firstly, the possible recent 3-day bullish morning star pattern. Yesterday's actions have neither confirmed nor denied its existence, because we should still know one way or another in the next few days on that. Secondly, the support highlighted in my previous commentaries, notably the combined lesser Fibonacci line at 146.33 and the flatlining long moving average, that's currently at 146.40, is substantial and did reject recent testing. Overall, prices are still within 2 major pitchfork patterns. We have the February 2022 to January 2023 bullish shift pitchfork, highlighted in purple on my daily chart. We're in between the lower time below, currently at 144.05, and the middle time above, currently 158.13. We're also in between the middle time above, currently 152.77, and the lower time below, currently 144.99 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. Now, so far today, nothing. We're still trapped between the overhead short medium moving average and below by the almost flatlining medium moving average. US dollar against the CNH, the offshore Chinese yuan. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's immediate countering bullish harami. It was nevertheless still a 4th consecutive close below the dark blue highlighted mid-January to date ascending triangle pattern, currently at 720.98 to 723.58. A couple of sessions ago, I laid out some potentials for the breaking out and below for such a pattern. Thus, a primary target X is down in the 716.05 zone, with a secondary harder to reach target X1 down in the 710.70 zone. Now, the immediate obstacle in the way low is the late February low at 717.97, which is where we roughly had this week's low when the recent congestion between approximately 714, well, below that, then the recent congestion between approximately 714 to 716. Meanwhile, the top side has a lot of resistance in the way, though that has been tested. It starts with the rising short medium moving average, currently 719.56, then the May 2020 high at 719.64, and the declining medium moving average, currently 719.57. Now, I can't still help thinking that this all has been prompted by the unusual contrary weekly key reversals we saw in the Chinese yuan 3 weeks ago. Back then, we had a weekly key reversal up in the spot USD CNY, the onshore Chinese yuan, and at the same time, we had a weekly key reversal down in the USD CNY, the onshore Chinese yuan again, but this time in the 1-year NDF. Interestingly, last week saw another weekly key reversal down in the USD CNY 1-year NDF, as well as a fresh weekly key reversal down in the USD CNY 1-month NDF. Now, so far today, an attempt to push higher up through the immediate overhead resistances provided by the short medium moving average, the medium moving average, and the May 2020 high. However, the market has seemingly become shy of testing the overhead broken uptrend of the ascending triangle pattern. US dollar against the Mexican peso. A large, combined, bearish engulfing pattern and bearish opening black Mariposa yesterday, which wasn't that hard, as the previous session was an indecisive doji cross, which was also an outside day. We nevertheless had a third consecutive close below the neckline of the February to April 2021 head and shoulders top, currently at 16.8012. With this neckline acting as the cap on yesterday's action. Now further up, there is a combination of the highlighted in dark blue middle time, currently 16.8988, of the December 2023 to January 2024 mildly bearish shift pitch hawk, as well as the more importantly, I suspect, the more importantly support now turned resistance at 16.8897. This congestion at 16.8897 was formed in mid-December 2015 and more recently featured in mid-August and late December last year. So it has some pedigree. Looking below, we had some congestion between 1670 even to 1680 even from August last year, which has now turned into resistance, as well as the 2013 low at 1662.06 before we can start looking at the blue highlighted lower time, and that's currently at 1656.57. Now, so far today, a seeming reluctance to test down to the 2023 low at 1662.06, but also a reluctance to recover higher as well.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.